Now, FTX founder Sam Bankman-Fried has apologized to staff in a letter that outlined a crash in collateral from $60 billion down to $9 billion. In a court hearing, the lawyer from FTX said a substantial amount of the group's assets are missing or stolen.
Some have referred to this crash as the Lehman moment for cryptocurrencies. Due to the collapse of the crypto giant FTX and the resignation of its founder, Sam Bankman-Fried, investors have written off what previously seemed to be the next big thing in technology. Customers are currently in a dangerous position. And that happened in just a few days. However, in the complex world of cryptocurrencies, such a collapse can be difficult to comprehend. Here are the main details of what happened. Bankman-Fried was the CEO and co-founder of the FTX Bitcoin exchange. What is Sam Bankman's X factor? His passion for quantum theory.
Business with Voyager, I think there's $70 million there that we put in that I'm not sure ever seeing that $70 million again. We've not used the majority of the cash that we have on our balance sheet. We want to be flexible. We want to be in a position where we are looking forward at what we can be doing, where we can be most helpful, and where we can grow the most.
FTX declared bankruptcy on November 11th with a market capitalization of $32 billion. In a series of tweets, he clearly stated, "I'm sorry I F up, and could have done better." He mocked Mark Zuckerberg for losing money on the metaverse, which resulted in massive layoffs at Meta, a topic I covered in a video. The unexpected decline of FTX will have an impact on anyone interested in investing in cryptocurrency. When you look closer, it becomes clear why FTX failed. This video will explain why. Bankman-Fried grew up on the Stanford University campus, where both of his parents taught law. He was previously a Wall Street trader. In 2019, he co-founded FTX with Gary Wang, a former Google employee. With the help of well-known venture capital firms, FTX has grown to become one of the world's largest digital currency exchanges, allowing users to buy, trade, and store various cryptocurrencies. The 30-year-old drew the rich and famous and was dubbed the next Warren Buffett. FTX has everything I need to buy, sell, and trade cryptocurrency. NBA star Stephen Curry became an ambassador. Investing in cryptocurrency. Tom Brady, an NFL player, also invested personally in FTX. The FTX logo could be seen everywhere. The name of the arena where the Miami Heat play will, however, be changed. Those stickers, however, will no longer be seen on Mercedes Formula One race cars. Sam Bankman-Fried, or SBF as he is known, is one of the world's wealthiest people. His total net worth reached a high of $26 billion. You couldn't tell anything just by looking at him. At work, he drove a Toyota Corolla and slept on a beanbag. He did, however, indulge a little. He lives in the Bahamas with 10 other people. It appears that his housemates all dated each other at some point. The whole operation was run by a gang of kids in the Bahamas, a source familiar with the situation said. Caroline Ellison, the CEO of Alameda Research, was one of them he dated. Others were ex-coworkers and people he met at MIT, his alma mater. Bankman-Fried founded the trading firm Alameda Research. Although Alameda and FTX were intended to be separate entities, their ties were extremely strong. According to a leaked document examined by CoinDesk, FTX's FTT cryptocurrency, which was created by Alameda, appeared to be held in frighteningly large quantities. FTT accounted for 40% of Alameda's assets, according to the document. Although technically not illegal, it demonstrated Alameda's reliance on its sister company rather than independent assets such as other cryptocurrencies or fiat currency, which would have been less risky. Because their financial well-being was intertwined, the failure of one business had the potential to destroy the other. That is exactly what happened. So, how did the shambles begin? After the crypto market crashed in the spring, Bankman-Fried relied on risky bets from Alameda to save struggling crypto companies. Alameda invested $500 million in cryptocurrency lender Voyager Digital. He stated that he felt compelled to act. He pledged to give away the majority of his wealth, and as a result, he became known as a rescuer, which fit the image he wanted to project to the rest of the world. However, he harmed his own businesses while attempting to save other cryptocurrency businesses.
More pain in the world of crypto. Voyager Digital files for Chapter 11 bankruptcy protection just days after the broker suspended withdrawals on the platform.
When Voyager Digital filed for bankruptcy a month later, Alameda lost $500 million. Alameda was having problems. Then, according to Reuters, Bankman-Fried supported Alameda by covertly shifting $10 billion of client funds from FTX to Alameda in order to prevent it from collapsing. He allegedly created a backdoor in FTX's accounting software that allowed him to shift billions of dollars without alerting anyone, even external auditors, to the transactions. But according to Bankman-Fried, it's not as it appears. We didn't secretly transfer, and we had confusing internal labeling and misinterpreted it. The plot becomes wilder. Money from the customers has gone missing in big amounts. According to Reuters, client funds totaling at least $1 billion have inexplicably disappeared. The story continues to become wilder. The remaining hundreds of millions of dollars at FTX were likewise stolen. The corporation is working with law authorities, and the new CEO of FTX stated that there was a hack. It might result in charges being filed. The biggest cryptocurrency exchange in the world, Binance, was concerned when the connections between FTX and Alameda's finances were originally revealed in the CoinDesk piece. Early investors in FTX included Binance. It made the decision to sell FTX's native token, FTT, for $580 million. Changpeng Zhao, co-founder and CEO of Binance, acknowledged that recent revelations regarding the close ties between Bankman-Fried's two businesses were to blame for his company's mass selling. The token's price fell as a result of Binance's massive selling. Then, more consumers left out of concern that this was just another failing cryptocurrency company. In just 3 days, they hurried to remove $6 billion. FTX was unable to meet demand. Binance agreed to buy FTX when it appeared that the company might perish, giving it a chance at survival. But, the bailout didn't take place. In addition to mentioning the reports of improper handling of customer funds and purported U.S. agency investigations, Binance withdrew its offer as a result of corporate due diligence. According to reports, American officials are looking into whether FTX improperly utilized customer funds to prop up Alameda. An industry that is still recuperating from the drop of cryptocurrency prices in May amid rising interest rates has been further damaged by FTX's abrupt fall from favor. The stunning collapse of FTX may lead to further regulation of the cryptocurrency market. Currently, the United States forbids a dangerous form of cryptocurrency trading where investors borrow money to place big wagers on the future value of cryptocurrencies. To adhere to American regulations, FTX's American division conducts fundamental trading. Bankman-Fried sent millions of dollars to the Democrats and pressured politicians for friendlier laws. It will take months or possibly years to address the FTX-related issues while lawyers determine if the exchange can even continue to function. Then there is the matter of clients who demand a refund. The withdrawal process has been put on hold by FTX. The amount that businesses and consumers will be able to recoup through the bankruptcy process is the key question. John Ray, a seasoned bankruptcy lawyer on Wall Street who oversaw Enron's cleanup, has been appointed as FTX's new CEO. According to a legal document filed in U.S. bankruptcy court in Delaware, FTX's obligations might be quadruple that amount, or up to $50 billion. "I'm truly sorry, once more, that we got to this point," Bankman-Fried said in his letter of resignation as CEO. Hopefully, this will result in some increased governance, openness, and trust. Those are only meaningless words for the customers. And that's all we got on Bankman-Fried and his FTX exchange. If you enjoyed the video, then please hit the like and subscribe button for more future content like this. And comment down your view on the current crypto market meltdown, and will the crypto market will ever recover to its previous glory. This is Visionomics, and thank you for watching until the end.